If you own a property in Dubai, then one of the biggest questions you will face is, should you rent out the apartment long term or for short term? Both strategies can work well, and it really does depend on multiple factors of what you should potentially go for. So throughout this video, we will consider the pros and cons of each to work out what may work best for you. Firstly, let's define the differences. So long-term rent, what that looks like in Dubai is typically a 12-month contract. During these 12 months, you will have installments that the tenant will pay. So typically it's anywhere really from 1 to 6 checks that you tend to see depending on the location. These will be post-dated checks given to the landlords used as installments for their rent throughout the year. On the other side of things, you would have short-term rentals like Airbnb, where you can rent out the apartment daily, weekly, or monthly. Dubai has an attraction for both short-term and long-term residents. It has been increasing the population massively, nearly 5% year on year. And on the other side of things, we have a massive tourism market also. Let's begin with long-term and why that can be beneficial. Well, first of all, it's the stability. As we mentioned, you'll have a 12-month contract that will be outlined with multiple checks or installments, you could say, that the landlord shall receive. This means that you've got predictable income. If you do have a mortgage, you can understand how these payments are going to reflect that and how much cash will be left at the end. You don't need to worry about any variables. The price is pre-agreed and the tenant is in that for 12 months. Typically, the landlords are protected, and if the tenant is to leave, then they have to pay 2 months notice and 2 months penalty. So you do tend to see the tenants stick out their contracts and stay for 12 months. With this, the tenant will then take on the apartment as if it is theirs. So you won't need to organise any cleaning, guest communication, or anything like that, as it will be the tenant's home for 12 months. They will take care of it. A lot of overseas investors or people with limited time will tend to do long term, as it guarantees them, and it means that they don't need to worry about it day to day on what amounts are going to be received or what tenants are in the apartment, which is commonly an overlooked factor, is that with long term rent, you have the understanding of what tenant is in there for a year. You likely get their profile before they move in and understand potentially what they do, how they'll be using the apartment, how many people are in there, etc. Whereas on short term, the guests are changing day to day, so it's difficult to hold someone liable for something, alongside the factor that it's not their apartment long term, so the likelihood is that they won't take as good care of the unit. That being said, the benefits of short term are that they can generate higher returns. So long term rent in Dubai tends to see an average for apartments at around 7%, whereas townhouses tend to get around 5%. On short term, you can expect to achieve 20 to 25% more. So for apartments, maybe around 8.5 to 9%, let's say. That's taken as an average, and many apartments will outperform this, and I have heard of yields up to 10 to 12% when in the short term market. It is important to understand what sort of profile that you will be targeting and buying the correct unit if you are looking to short term it. People will typically look at the view or the furniture that's in the apartment, so it's important that your unit matches up to this to maximize its returns. One of the biggest benefits, again, that often gets overlooked is that the short term is flexible. So you can often block out periods that you may want to use the apartment, and on the flip side of this, if you do look to sell the apartment, then you can do it vacant on transfer. So let's say the contract is scheduled for 8 weeks, you can just block off the calendar from that period, meaning after 6 weeks or so, then you can transfer on the property. This is an advantage, is if you're looking to sell your property, you typically achieve the highest price with it being vacant, as this will then appeal to more buyers in the market that are looking for an opportunity to move right in. What's important to consider with short term though is it is less reliable. So your returns will vary on this month to month. Dubai has periods where it has a lot more tourism than others, meaning that you will be able to achieve a higher price in months such as October to April. Then during the summer, the price will be weaker. This can make it a little bit more difficult to manage, especially if you've got a mortgage on the property. To add to this, there are more uncertainties. So if you are managing the Airbnb yourself, then you will have multiple different costs, cleaning, furniture, maintenance, etc. All these will need to be taken into account when looking at the profits from the Airbnb. If you are using an agency then to do it, then they will have a management fee. You're then relying on the agency to have the property occupied to ensure that you're making money from the unit. If they are underperforming, then it's likely your returns will be substantially less than you desire. There's 3 things that I would consider before you pick which avenue to go down is, firstly, how involved do you want to be? If you are happy to act as landlord and be on top of things, then go for the Airbnb, as you'll be able to maximize your returns here and likely get 20 to 25% more funds than you would get on long term. Lastly, if you do plan to use the unit yourself or potentially sell it in the near future, again, Airbnb is better rather than being locked into a 12-month tenancy contract, this way that you can sell off the unit very quickly. If you are interested in investing in property here in the UAE, then click the link below to book in for a call to discuss the details further.